Hi there, welcome to Wyckoff Technical Analysis session for Stellar. If you're new to my sessions, here are the key takeaways, the three key takeaways you can expect from my sessions. And let's start with the weekly chart for Stellar. And no surprise so far that Stellar is still coming down along this downward channel that started back in mid-July. And as of this moment, I keep the percentage, the possibility of a sign of weakness showing at around the yellow key level of 24 cents 50, the same, so 75% higher possibility for the price to come to this level, and 25% remain to go back up to show us a second test, but then it has to break outside of this downward channel plus a couple of other key levels before that can happen. And to this point, what's significant is when we get to the daily chart, it will become more clear that the price is challenging this white line over here. And what's this white line? This solid white line is the ceiling of the long-term playground zone, something that I track for as long as the asset has been traded. So 70 to 80% of the time since 2017, in the case for Stellar, it has been traded within this box, the range of this box. Only the crazy distribution peaks period and like the crazy lows, those period weren't within this box. So the last time this year, I'm not talking about many years ago, just this year, we were in this zone for 2 times. So Stellar came back to this area in early March, struggled around the ceiling, dropped to below the yellow key level during April, reclimbed during mid-May, but then fell back to the same level in June. Okay, so we have been in this level 2 times just this year. October 10th brought it to an even lower point that that's where the automatic rally and sign of strength was during the 2022-23 accumulation cycle. So you can see that the price of Stellar can actually go back to our 2002-2003 level. Just by that one day, it showed us a lot. Okay, so that's the big picture. The downtrend still continues. The significance is it's probably re-entering a long-term trading range. And in terms of the Bollinger Band Keltner squeeze that I usually share, as of now, there's no squeeze happening. We're still in the swing after the squeeze that happened in mid-late June. So it's swing up in 1 week. And then now we're in a declining trend since that time, from mid-July. Alright, so that's the situation. So if you take a look at here, the squeeze happened during September, even earlier. It actually started much earlier, around December 2023. This little bit of period, I would consider that still a same squeeze because the price range is just so narrow. It went up in 4 weeks, and then subsequently, a prolonged period of decline from December 2024 all the way to June, end of June this year. And now we are having this smaller swing. So essentially, it looks to me this is a continuous motion. So I mentioned that not in this session, but in many other sessions, a lot of times these swings, when it happen, it's like, imagine ripples, right? If you throw a stone into a pond or like in your bathtub, it swing, the ripple initially was very large, and then you get smaller ripples, and eventually it dies down. Alright, so that's how it happens. Eventually dies down. Same thing over and over again. So when you use this, you'll see it indicates the swing is about to come. Sometimes it takes longer. And also, one very key thing that the community members ask, is it always going to the upside first? The answer is no. It can swing towards the downside first before it goes up again. So don't misuse or misunderstand this indicator. It's only showing us potential bigger price move is coming, not saying it's going to either side. It can go either way. Alright, so we have the big picture. Now let's get to the daily. So here in the daily, while we're still on the Bollinger Band counter squeeze, the squeeze happened in the past few days, and yesterday maybe the very first move after the squeeze, and now the price is deviating from that range. So expect more fluctuations to come. And let's go back to our Wyckoff for daily chart. We talked about a higher potential for the price to come down for a lower point, and indeed it happened in the past few days. So started Thursday, it was the first move breaking outside of this wedge that I shared last session. We were getting towards the breakout point before November the 3rd, and indeed it happened. And now we are into an area that we talked about, that we can take reference on what happened back in March, April, and June. So these Wyckoff stages, let's focus on the red one first, because that seems to be the more likely scenario. So we can take away this question mark. That little peak over there was an LPSY, and what's coming down, this period is likely the preliminary support period, and it's basically confirmed. So I'm going to move that 75% to the next stage, the selling climax. So while we're going through this preliminary support period, that's what happened back in February this year. All right, we were at this similar situation back in February time, and selling climax back then, when it closed in mid-March around this level of 24 cents, but the dip, the lowest point was around 22 cents 70. So we're still a bit far from that. So this yellow line was near where the selling climax closed, the 24 cents 50, the yellow key level. This intermediate level, let me change it to a dashed line, was where the spring and the subsequent test was. Alright, so I just want to make sure these tags probably come from a lower level timeline. Okay, so we can remove the yellow ones. I might have brought them over from somewhere else. So that's the point here. Where is the selling climax going to end up at? Is this going to be this level of the yellow dashed line around 22 cents? Or I want to extend this further so we can cover sufficient area. Yep. So if this continue to follow the trend to come down, is it going to end here? Or is it going to end even lower? Because this orange key level of 20 cents was where this intermediate period and also these low points and the sign of strength were. Okay, there were quite a number of reference price points over the past that construct this 0.02 orange key level. The lowest, however, it can get, if we take reference to what happened back in 2023 or even 2024, just last year, summer, is the bottom edge of the long-term playground zone. That bottom sits around 7 cents. Okay? The situation for Stellar may seem to be better than some other altcoins because the October 10th event only slightly passed the center line of this long-term playground zone at around 17 cents 80. Alright, so that's where the level this peak was, and also these lows were. That's something different compared to other altcoins. Some other altcoins went all the way to the bottom or even lower of the long-term playground zone. For Stellar, it ended up somewhere in the middle. Okay, so I'm not sure whether I can say that's a little bit more relieving for Stellar supporter. And then this purple scenario, we basically were discussing, was this period actually like the October 10th, 11th, was that actually a selling climax, and then like the accumulation has started at that level? It looks like, for the price movements, especially for the past few days, told us it's probably not the purple scenario, but the red one, that we were still at the late stage distribution during October, and now we are actually getting into the beginning of accumulation. So that you see where the range was during March all the way to July, just this year. We were at that range, that accumulation happened back then. And then we've got a little distribution, and then we've gone back to a mini accumulation for a short period of time during June all the way to early July before we have this climax again. Okay, so that's the Wyckoff and the key levels. And then, after the wedge, the breakout timing, we talk about November 3rd. What's next? Is there any like near-term breakout timing? So again, this, like, if it breaks to the upside, there's this very wide range here before it hits the downward channel ceiling. That's somewhere around 36, 37 cents. It's not that easy to go past that that soon, unless, I don't know, some crazy news comes out and like a lot of big countries around the world are saying they're going to agree on some fantastic deal and the world is going to be happily ever after again. Then the price can shoot up like that. But this key level of green, like 33 cents, it has been tested multiple times during end of October, so it's not an easy level to pass through. You see those tests failed at that point multiple rounds, and we came down from that point. So in order to break that, it has to be some very good news. All right, and coming to this point, the center line I shared in some sessions, the cross between this line and the key levels are still far, like near the end of the year. So the reference we can take is the recent development of the prices. So we have been outside of this wedge already, so we can adjust the lines to fit our needs. So if the trend, the rate of decline is much steeper like this currently, based on the past 8 to 9 candles, if the price continues to trade in this manner below this yellow dashed line, there are multiple breakout time points, but that's not important. Why I'm saying that's not important? Because even if I tell you the date is around November 9th, November 10th, if the price in the next 2-3 days continues to trade within this, like above this white line, it can break above, but then it's still within this bigger downtrend, this box, alright, this blue box. So it's not something surprising that it bounces off from this point. In fact, that's actually very natural. So these channel boxes, if you're new to my sessions, these channel boxes is where the price tends to bounce off around 3 lines. If I change it to a line chart, it's easier to explain. The candlestick chart is showing us where the tips are so we can draw the boundaries. Till you see the price, when the box or the channel is established, it tends to bounce off from the bottom, the center line, on and off, and then the ceiling, just to come back to the bottom again. So it's very natural for it to bounce towards the center line, this dashed blue line, or even go higher to the ceiling and then bounce back again. Imagine we are playing air hockey, okay? That's the air hockey table, that's the channel, and the puck just basically bounce along the sides. Alright, so that's the use of the box, and when I say, even if I tell you there's a breakout timing between this current downtrend with the white line and the yellow key level of 24 cents 50, if it breaks to the upside, that's nothing surprising because we are kind of expecting that air hockey to bounce off from the edge. What's interesting over here, however, when we get closer to the middle of the month, if the price still continues to trade within this wedge, the wedge forms between this yellow line, dashed line, and the solid blue line. If the situation or the market sentiment gets worse, there's a tendency for this to break towards the downside. Okay, if that's the case, then that means we're going to enter another downward channel, or we have to adjust this to see whether we can catch that the change of rate of decline. I see there's still room for me to adjust this box because the tips here just aren't very close. So if it dropped deeper, we can still have room to adjust. But for now, I'm referencing this sign of weakness point to draw this box. So that's why it's sitting at this level. But when we get to the middle of the month, like I said, when the price trades towards the tip of this wedge and breaks lower, that's the time we have to adjust the channel box and see where the bounce is going to happen. Where and when, basically. Okay, so that's a little bit different because it's at the downside now. If it breaks the bottom support, then that's a different story compared to going back just within the box. Okay, so kind of lengthy explanation because I know there are always new joiners to the community. Just to recap, the downtrend still continuing and the price is hitting the bottom edge of the downward channel. And we are likely going to see the next sign of weakness after the first two in the early part of this year, in March and June. When that happens, there may be a little bit of rebound. But then, it's not entirely into the accumulation area yet. Back in 2002, 2003, all the way into October 2024, okay, that accumulation range was below the orange key level of 20 cents, which the October 10th event has shown us the stellar price can get back into that range. Okay, thanks for joining me today. See you in future sessions. Bye.